Welcome back, everybody. It's Thursday, January 2nd, 2025, and we're going to be diving into the world of Bitcoin trading today.
Sounds exciting.
Yeah, we've got this really fascinating audio snippet from a French trader named Nico,
Okay.
recorded on December 28th, 2024.
Right.
And he's talking with his colleagues about some recent market action, and even more intriguingly, how things really work behind the scenes.
Always a good sign when someone's willing to pull back the curtain a bit.
Right. So he starts by recapping Bitcoin's wild ride in December.
Okay.
You know, that surge to a new all-time high of $108,400.
Yeah, that was quite a spectacle. I imagine our listener remembers that surge well and the subsequent flash crash.
Yeah,
Classic Bitcoin volatility on display.
totally. And speaking of volatility, Nico mentions using hedging strategies, but he's pretty vague about the specifics.
Okay.
I know hedging is a way to manage risk in trading,
Yeah,
but I'm curious what kind of hedging Nico's talking about, especially since he gets into market making later on.
that's a great question. It does make you wonder if there's a connection there. Let's keep that in mind as we unpack this further.
Okay, so then Nico dives into the role of market makers.
Right.
He paints this picture of them being like the engine room of the exchange, always ready to buy or sell, making sure there's enough liquidity so everyone can trade smoothly.
Yeah, you could say they're the oil that keeps the gears turning. Without market makers, the whole trading machine would grind to a halt.
Right. But here's where things get a little shady. Nico starts talking about slippage. You know, when you place an order and the price suddenly shifts against you, he's suggesting that this might not always be just bad luck or a random occurrence.
Now, that's a bit unsettling, isn't it? You mean, say, someone might be intentionally causing those price slips?
That's exactly what Nico is hinting at. He claims market makers actually have a tiny time advantage. They see incoming orders milliseconds before anyone else.
Milliseconds? That doesn't sound like much.
It's not in everyday life, but in high-frequency trading, it's a lifetime. And Nico says this tiny head start is all their algorithms need to adjust the order book and basically front-run trades.
So they're essentially jumping in line ahead of everyone else and creating slippage that benefits them. Clever, but not exactly fair play, is it?
Right, and to make it crystal clear, he gives a specific example of how a market maker can manipulate the order book to cause slippage for someone trying to buy, say, 5 Bitcoin contracts at $100.
Now, that would be helpful to break down step by step. I'm sure our listener is curious how this actually plays out in the order book.
Absolutely. So imagine the order book as a list of all the buy and sell orders waiting to be filled. The highest price someone's willing to sell for is called the ask, and the lowest someone's willing to buy for is the bid, right?
Precisely. And that little gap between the bid and ask is what we call the spread.
Okay, so in Nico's example, our buyer wants to buy those 5 contracts at $100. Let's say the current best ask is $100 and the best bid is $99.
Got it. So the market maker sees this juicy buy order coming in, but decides, for whatever reason, they don't want to sell at that price. Maybe they think Bitcoin is about to jump even higher.
Exactly. So using their tiny time advantage, they quickly pull their sell order at $100, leaving a gap in the order book.
Sneaky.
And it gets sneakier. At the same time, they might put in their own buy order at a slightly higher price, say $101.1, instantly becoming the new best bid.
So the buyer who wanted to buy at $100 is now forced to pay $101 if they want to get their order filled right away. That's how they manufacture the slippage.
It's like a magic trick, but with real money at stake.
It certainly makes you wonder how much of the price action we see is driven by genuine supply and demand versus these kinds of manipulations.
And that's why Nico stresses the importance of data synthesis. He says looking at trading volume, liquidity, and price in isolation is a big mistake.
You absolutely need to connect the dots. Seeing those huge buy orders come in might make you think the price is about to skyrocket. But if you don't factor in the liquidity and the potential for market makers to play games, you're missing the bigger picture.
And speaking of the bigger picture, Nico reveals something else that market makers are constantly watching. Open interest. You know, the total number of outstanding contracts held by traders.
That makes sense. Knowing where those large positions are concentrated is crucial for them to manage their risk and potentially profit from it. It's all about information asymmetry.
It's like they're playing 4D chess while everyone else is stuck with checkers.
And it sounds like Nico has even more to say about this chess match. He mentions some common trading misconceptions that he plans to debunk in a future recording. I'm definitely curious to hear what myths he's going to bust.
Me too. Maybe we can track that down for a future deep dive. But for now, let's take a moment to digest what we've uncovered so far. This market-making game is a lot more complex and, dare I say, manipulative than it appears on the surface.
It certainly challenges the idea of a purely free and transparent market.
And it makes you wonder if market makers can influence prices in this way. How does that impact the concept of a truly fair market?
That's a really important question and one that deserves further exploration, especially as crypto becomes more mainstream and attracts more everyday investors.
It's a bit like the Wild West out there right now.
Yeah.
But that's why this deep dive is so valuable. Nico's insights are giving us a much-needed glimpse behind the curtain.
And hopefully it'll empower our listener to navigate this complex landscape with a bit more awareness and a healthy dose of skepticism.
Absolutely. Knowledge is power, especially when it comes to trading. But we've covered a lot of ground already, so let's take a quick break and then we'll dive into some of Nico's other insights about market making and these so-called trading myths.
It's like we've been handed a decoder ring for this whole market making game.
Right. We've got Nico, our insider guide, spilling the tea on how these market makers operate. And it's making me rethink everything I thought I knew about trading.
Yeah, I have to admit, it's making me question some assumptions, too. We often talk about the crypto market being this decentralized utopia where everyone has equal access and opportunity.
Yeah, the whole power to the people narrative.
Exactly. But what Nico's describing suggests that there are still powerful players who can exert a significant influence on the market, even in a decentralized system.
It's like, sure, there's no single central authority controlling things, but there are still these whales lurking in the depths, pulling the strings.
A very apt metaphor. And it makes you wonder about the true nature of fairness in this market. If market makers can manipulate prices, even in subtle ways, does that create an uneven playing field for everyday traders?
Yeah, it definitely raises some questions about transparency and regulation.
Yeah.
Especially as crypto becomes more mainstream and attracts more people who might not be aware of these behind-the-scenes maneuvers.
It's a bit like playing a game where you don't know all the rules, isn't it?
And the more you learn about those rules, the more you realize how the game can be rigged.
Which brings us back to those trading misconceptions that Nico mentioned. I'm really curious to hear what he has to say about that.
Me too. What kind of myths are we talking about here? Are we falling for common traps without even realizing it? I'm starting to feel like a total noob again.
Oh, we wouldn't say that. But it's always good to question our assumptions and be open to new information, especially in a market as complex and ever-evolving as crypto.
For sure. So Nico drops this little teaser about how he'll be addressing these myths in a future recording. Do you think we can get our hands on that?
I'm sure we can find a way. It would be a great continuation of this deep dive. We could unpack those myths one by one and see how they hold up against Nico's insider knowledge.
Yeah, and maybe even debunk some of our own beliefs along the way.
Mm-hmm.
I'm all for challenging the status quo and getting a clearer picture of how things really work.
Absolutely. I think that's the key takeaway here. It's not just about learning the mechanics of trading, but also understanding the deeper forces at play in the market, the motivations, the strategies, the manipulations.
It's like learning to read the subtext, the hidden messages beneath the surface of the charts and the order books.
Exactly. And I have a feeling Nico is about to give us a masterclass in deciphering that subtext.
I'm ready for it. Bring on the myth busting. But before we get ahead of ourselves, let's recap some of the key insights we've gleaned from Nico's revelations so far.
Okay, so first and foremost, we learned that market making is much more complex than it seems. There's a whole hidden layer of strategy and potential manipulation going on.
Yeah, and that market makers have this tiny time advantage that they use to their advantage, creating slippage and potentially influencing prices.
Right. We also learned the importance of data synthesis, of connecting the dots between trading, volume liquidity, and price action to get a more complete understanding of what's driving the market.
And don't forget about open interest, that crucial piece of the puzzle that market makers are constantly tracking to gauge market sentiment and manage their risk.
It's all about information asymmetry, isn't it? The more you know, the better equipped you are to navigate this complex landscape.
Knowledge is power, as they say. But even with all this knowledge, it's still a bit daunting, isn't it?
It can be, but I think that's also what makes it so exciting. The crypto market is constantly evolving. There's always something new to learn, and there's always the potential for big gains if you can outsmart the game.
And avoid those common pitfalls that Nico is about to reveal.
Exactly. I have a feeling we're about to get a crash course in how to spot those traps and trade smarter.
I'm ready to upgrade my trading game.
Yeah.
Let's hear what Nico has to say about those trading myths. Okay, so let's jump back into Nico's world.
Yeah.
We left off on this cliffhanger about common trading misconceptions.
Yeah.
What do you think he's going to reveal?
It's hard to say for sure without hearing the actual recording, but based on what we've learned so far about Nico's insights into market making, I wouldn't be surprised if he challenges some of the more simplistic views of trading.
Like what?
Well,
Give me an example.
For instance, there's this popular belief that technical analysis alone is enough to consistently profit in the markets. Just studying chart patterns and indicators.
Yep. Yeah. Follow the trend, buy the dip, all that jazz.
Right. But if Nico's right about the extent to which market makers can influence prices, then relying solely on technical analysis might be like trying to navigate a maze blindfolded.
You're just bumping into walls, not seeing the bigger picture.
Precisely. You might think you're spotting these amazing entry points, but what if those price movements are being orchestrated by market makers to draw you in?
Whoa. So what's the alternative?
Yeah.
If technical analysis isn't enough, what else do we need to be paying attention to?
Well, I think Nico's already given us some clues. Remember his emphasis on data synthesis.
Right.
It's not just about charts. It's about understanding the interplay of trading, volume, liquidity, and price action.
And don't forget about open interest. Knowing where those big positions are concentrated can give you a sense of the real market sentiment, not just the manipulated surface noise.
Right. It's like trying to read the minds of the whales, anticipating their next move.
This is all starting to sound very Sherlock Holmesian. We need to become trading detectives, gathering clues, and piecing together the puzzle to uncover the truth behind the price action.
Haha. I like that analogy.
Yeah.
Yeah, and I think that's what makes trading so fascinating, especially in the crypto market. It's a constant challenge, a mental game against both the market itself and the other players, including those shadowy market makers.
Like a high-stakes poker game where you're trying to outwit your opponents and read their tells.
And the stakes are getting higher all the time as more money flows into the crypto space.
Which is why it's more important than ever to be informed and aware of these behind-the-scenes tactics.
Absolutely. Knowledge is your best defense against manipulation. The more you understand how the game is played, the better your chances of coming out on top.
Well, I'm feeling a lot more informed and maybe a little bit paranoid after this deep dive.
A healthy dose of paranoia is never a bad thing when it comes to trading.
I think the biggest takeaway for me is that the crypto market, for all its promises of decentralization and transparency, is still a very complex and potentially manipulative ecosystem.
It's certainly not the Wild West that some people make it out to be. There are sophisticated players operating behind the scenes, and they have a significant impact on price action.
So what's our final piece of advice for our listener today?
I would say stay curious, stay informed, and don't be afraid to challenge the conventional wisdom. There's always more to learn, especially in a market as dynamic and fast-paced as crypto.
And maybe keep a magnifying glass handy to spot those market maker footprints.
Indeed. Bit of detective work never hurts.
Thanks for joining us on this deep dive into the world of Bitcoin trading and the secrets of market making. Until next time, keep your eyes peeled, your mind sharp, and happy trading.